Hey, what's up guys? Alan here with eatsleeptrade.net. Going to be bringing you guys the swing trading watch list and market update for October 10th, 2016. Not too much to report as far as the overall market goes, as we are still in a very choppy and unpredictable market, very much back and forth with no general direction, making it very tough on swing trading and probably just trading in general. So we're going to be talking about that, the S&P 500, where we're at with it, as well as going over our top watches going into next week. So do me a favor, if you guys appreciate these videos, hit that like button down below. Also, leave me a comment. Let me know what you guys are watching into next week, what your favorite setups are, and what stocks you have going on your watch list for next week. Alright guys, first up, let's go ahead and touch base on the S&P 500. As mentioned, there's not a whole lot to talk about here. We're still in this very choppy consolidation, no general direction. The market's gone back and forth. Every time you feel like the market's going to go one direction, you start to see some strength. It is followed off by a just as powerful sell-off and then reiterated again with some more buying. So it's impossible to try to predict the general direction right now, which is really taking its toll on, I think, traders in general. So what we're watching into next week is basically two things. You've got this nice little wedge that's forming right here, and this is going to have to break out to one of those sides. So I'm going to be watching that original set of lower highs that we're watching, so this resistance area here, as well as our long-term uptrend, and that's going to kind of be my guide for which direction we're going to break when one of those gives in. And I have a feeling that whichever direction that is, we should see a fairly strong move in that direction. So you don't want to get caught on the wrong side of the move if it happens to be a breakdown and you are a swing long trader, and vice versa. You don't want to be caught as a short and have the market break out to new highs. That will not be very productive in either circumstance. So for right now, our market condition remains the same: smaller position sizes and tighter risk, and we're really just going to have to be patient, wait to see which direction the market decides it's going to want to move, and for now really try to focus on the prime setups that we see occur, and try not to overtrade, as overtrading in a choppy market like this can really nickel and dime yourself, and you'll see your account slowly start to wither away. So recognize overtrading. If you are overtrading, keep your position sizes smaller and keep your risk tighter until we can get through this choppy market and the S&P 500 picks a general direction that it wants to go, and we will prepare for that and then capitalize when that time comes. Alright guys, first thing we're going to take a look at here is AMD. First thing you'll notice is we've had a lot of success with AMD on a lot of great breakouts and a lot of opportunities that this has given for us. They just recently did a stock offering, which was the exact culprit for this nice little sell-off here, which we were long for a breakout. Ended up stopping out on this first day here and got out around 670, I think. So again, such a minimal risk or loss compared to the moves and wins that we've had on this chart. Since then, it's trended down quite a bit, and I started to catch on to a nice little falling wedge that I was hoping was going to form inside here as we consolidate down towards 550 and then break out, and that would give me a great risk versus reward entry down near that 550 area. But it's actually rebounded quite well and managed to pull itself kind of out of that consolidation or that set of lower highs and test that $7 resistance area again. And it's pulled back since then. Most of last week was a minor pullback, but it is sticking to the top side of this now, and it is starting to kind of act as support. So if we start to see it move back through 7 and start to see a breakout up above 7, I'm going to be looking to get long on something like that, especially if we can get some good volume. The 20-day moving average is starting to curl back up here. So this is going to be definitely on a high priority watch. There's been a lot of insider buying, so more reason to keep it on watch and to assume that it still has some momentum in it and can definitely see a higher type move. It does have earnings coming up pretty quick, so keep an eye out for that as well so you don't get caught during that earnings. It has had all successful earnings, nice earning breakouts through its last 2 or 3 reportings, but always something to keep in note if you guys are going to be long on that going into the earnings. Next, let's look at CBB. So this is Cincinnati Bell. We traded this a while back, basically for a breakout right over this resistance turn support area now, which a while ago or a few days ago was $4 basically. And the stock has now done a 1-for-5 reverse split. If you guys are not familiar with what a reverse split is, I'll put a link right here so you can go check out that video. But essentially, it's going to reduce the amount of shares in the float by 5, divide by 5. And it's been trading some pretty good volume post-split, which typically they do. I'm not a big fan of reverse splits. However, the stock has been trending up, and I'm not exactly entirely sure why they did a reverse split. But if we can hold this $20 support area, which is really looking at like 19 right now. So if we can hold 19, which was the lows post-split, I think we can have a shot at making a run back up to this 25-26 area, which was our original idea prior to the split. But I feel like that move could happen maybe quicker now if the float's lessened and post reverse split on that. So I'm going to keep a close watch, especially with the volume that it's been trading, and just see if we start to make a move back up towards that 24-25 area. Next, let's look at CPPL. So I had an eye on this a while back, and it's made a nice move outside of this wedge on really good volume. So the volume's really picked up for whatever reason on this breakout, and now it has just consolidated and is trading in this really tight range. So I'm just going to keep a close eye on it, see if we can break out of these prior highs here, which was at 1640. The 20-day moving average is starting to catch up now, so that's going to decrease the amount of risk that we have on any type of entry if there is a breakout, and establish a good risk area for us to use as a guide if we do get into a trade for this. So for now, I'm just going to keep it on close watch, see if we can get closer to that 20-day moving average and start to get a break above this 1640 area with decent volume. Next, let's take a look at FOLD. This was on our watch list a couple weeks ago as well as last week. The first time was for the trade here on the breakout of the wedge, which did work out fairly well for us. It has since pulled back, and I mentioned last week that there's a good shot we're going to hold this current uptrend line and make a move back above 750. And sure enough, we did get that on Friday. So going to be looking for a continuation push back up through 8 and possibly back up here towards the prior highs around 840. Next, let's take a look at HALO. Been keeping a close eye on this one here as we just had a recent test up to this 1280 resistance area. We put a pretty nice run in starting at the beginning of early September, late August, and now we're actually putting a nice little bull flag. So I'm just going to watch this nice little bull flag set up here as we hold the 20-day moving average and see if we start to get a move back up towards this 1280 area, and that's going to be kind of my key resistance area for a breakout there on good volume. We could start to see it climb up towards this 1480 next resistance area. Main keys are going to be holding that 20-day moving average, or at least holding the support on this set of lower lows. Next, let's take a look at MU. So MU just reported earnings on the 4th and didn't gap down and completely sell off like it did prior earnings report. So that's a good sign in and of itself. Right now, it's just grinding along the 20-day simple moving average. It is putting in higher lows and making a tight ascending triangle right at $18. So I'm going to be looking for that $18 breakout. And this chart setup is very similar to SYMC, kind of the same thing where you're grinding up right on that 20-day moving average and you're looking for that breakout to the top side. So both of those charts, MU and SYMC, are on my top watch for this week. MU looking for the breakout over 18 as we form this ascending triangle and hold that 20-day moving average. Next, let's take a look at RUN. RUN was on watch last week for the break over 630 resistance. You can see on Friday we did manage to get that. not before pulling back and testing that 20-day moving average. So going to keep this on watch, see if we get any type of pullback towards that 630 area, which will give us a good risk reward entry, as we're actually not too far off of it right now. Want to see some continued momentum on Monday and a move back up towards this 720 area. Next, let's take a look at URBN. Tweeted this chart a while back after it had what looks like to be a power earnings gap. It's been consolidating and creating a nice set of lower highs as it consolidates. It's come down to test this 34 support area, which it held on to pretty well, and into last week made a pretty decent move up over 37 bucks and coming out of this consolidation. So going to be watching this for any type of entry I can find on it, whether it be a pullback again or near the 20-day moving average, or pullback towards this set of lower highs that would then turn to support, and then work for a move back towards 38 bucks. Next, let's look at WIN. Pretty interesting chart right here. It has been trending up basically since the beginning of the year, and now we're kind of in this upward channel that's very defined right here. We've got a major resistance area at 1040, but we've had a big sell-off for the last 2 weeks, and going to be looking for a bounce setup on this. You know, chart's pretty beat up, and it's definitely due for some type of bounce, especially if we can get near this lower trend line or lower channel support area. That's going to give us a great risk reward for play back up towards the top of the channel, which could give us a move towards 1040 or higher. Alright guys, and that is going to wrap it up for this week's swing trading watch list and market update video. If you guys have any questions or suggestions, please leave them in the comments below. Also, if you guys appreciate the videos and you haven't already, don't forget to hit that like button down below. You can hit the subscribe button as well, so you guys can get updated immediately when I upload my next watch list or any new lesson videos. Don't forget to check out our website, eatsleeptrade.net. From there you can follow me on Twitter, as well as like our Facebook page, so you can stay up to date on all the stocks that we are watching and trading. Alright guys, thanks for watching. Good luck into next week, and we will see you in the next video.